if you look at the misallocation of capital, you look at in the 3D printing space, Stratasys. It's about, maybe now it's about 2 times sales.
Okay.
Form Labs in the private space. Last round, which means the deal will be higher than this, the IPO or what next round, 10.5 times sales.
Okay, so 2.5, or
2
2
times
sales in the public market, 10.5 times sales in the private
That's the
market.
last round.
Yep.
I'm sure it's going
Higher.
Stratasys is much better positioned because it is now being integrated into aerospace companies' engines, right? You think that an aerospace company is going to allow a startup to design a part for its engines? Pretty unlikely. You have to get battle tested over a number of years, right? It's taken a long time for Stratasys. So they're in a much better position. I don't understand this.
What's going on, everyone? My name's Obi and welcome back to Courtside Financial. If you're new to the channel, make sure you hit that subscribe button so you don't miss out on the next video, and also make sure you hit that like button because it really does go a long way in helping out the channel. So WeBull's 4 free stock promo has been extended to February 1st. When you open up your new brokerage account with WeBull, you'll get 2 free stocks. And when you make an initial deposit of $100, you'll get another 2 free stocks. The total value of all 4 of those free stocks could be up to $3,700. And lastly, cryptocurrency is now available on the platform, so you can trade crypto with 0 commissions. So today we're going to be talking about Stratasys 3D printing. It's currently 5:50 p.m. Eastern time here in Michigan, and the stock is currently trading at $36.45. It's up 1.7% for the day, and it actually hit its all-time high today of $36.95. So to preface, I first started buying Stratasys 3D printing at $18. The stock began to fall. It fell all the way down to around $12. I mentioned it in the Discord, and I was very confident that this stock was undervalued at that time. So in the beginning of this video, you guys saw a video of Cathie Woods over there at ARK Invest on Anthony Pompliano's podcast, doing an interview with him. Before I ever knew that ARK Invest was ever buying Stratasys, I was buying Stratasys. And doing a little bit of research, I discovered that ARK Invest had actually made it as one of their biggest positions for 3D printing. And then on top of that, I ended up seeing that Cathie Woods and Anthony Pompliano interview a while ago. I think it was like 3 months ago, and that just gave me a lot more conviction in the stock because, hey, obviously I'm just a YouTuber. You know, I'm not an expert in 3D printing or a lot of these technologies that I do talk about, but I try to do my own research and draw up my own conclusion and my own bullish case from that. So that just gave me a lot of conviction to hear what Cathie Woods had to say about it. So it made me feel like, hey, I'm tracking right. I'm doing the right thing in this stock, even though it keeps going down. And I didn't lose my cool and sell out for a loss. So I'm actually going to run you guys a clip really quickly of a flashback to one of the very first videos I did on this channel where I was talking about Stratasys, and I told you guys this was before I saw that Cathie Woods interview, so I was just talking about it from my perspective. So I actually went ahead and opened a position in Stratasys this morning a little bit after the market opened. I have an average cost of $18.64. It's currently 3:06 p.m. Eastern time in Michigan, and the stock is trading at $19, up 3.32% for the day. So let's talk a little bit about the stock. So 3D printing is an industry that has left investors a little disappointed in recent times. This is an industry that is contingent on being disruptive, and disruption takes time. Innovation and disruption can lead to extremely high returns, and that's why I like to invest in things that are innovative in that sense. With the current landscape and economic environment, companies are innovating more now than ever. So there's one thing that I like to frequently keep in mind. This is something that's extremely important when it comes to buying stocks, and that is that it matters so much when you buy. For example, if you bought Uber in 2019, you might have been disappointed, but how much of the conversation is surrounding Uber and other rideshare platforms right now? I don't own Uber anymore. I took profits, but you get the point. That's why when I had the opportunity to invest in a company like Stratasys, I completely took advantage of it. Stratasys is a 3D printing manufacturing company, and now if you keep up with technology at all, you know that 3D printing is almost seeming like an inevitable future. I think this type of technology has huge upside because of its ability to disrupt supply chains. In doing so, that would make manufacturing and prototyping less costly and overall just more efficient. Now, my biggest concern as an investor in 3D printing is who's going to be the players in this industry, who's going to be able to take advantage of these market trends the most. I personally pick Stratasys because they're very versatile and they have a lot of products that appeal to a ton of different industries. Not only that, but they are also the largest manufacturer when it comes to 3D printing, so their size could be something that gives them a competitive advantage and keep other competitors at bay. Now let's go into the numbers. I was watching Stratasys very closely at $19 for a while, and today I had the opportunity to buy in under that. They have a market cap of about $1 billion, which is way less than competitors. So to me, it looks like I'm paying less for these shares. Another company, Proto Labs, has a market cap of around $3.2 billion. The 52-week high for Stratasys was $30.60. So in a market where there's so many stocks that are overvalued, it actually appears to me that Stratasys seems to be undervalued right now, so it made it a great play for my portfolio. Stratasys is still down 17.63% for the year. This is a company with no debt, and they also have just under $7 million in cash on their balance sheet. Not only that, but they've also been able to generate a ton of revenue and have positive cash flow even in their worst quarters. In the back half of this year, Stratasys is set to announce new products, and one of those products could be 3D metal printing. If they announce that they're going to be doing 3D metal printing, then the bear case for this stock becomes so much weaker because that's an area where they're really lacking as opposed to some of the other 3D printing companies. So if this stock does go down a little bit, I'm going to buy more. I didn't just dump all my cash into it. I really do think that this is an investment where I could 2x to 4x my money in the next 3 to 5 years. So I'm playing Stratasys for the long game. So it's crazy how that was around 7 months ago, but there are a few things that I want to point out for Stratasys' most recent earnings report, which was their Q3 2020. Stratasys finished Q3 with $308 million in cash, which I think is a good thing. But they reported a net loss of $405 million, which is obviously more cash than they have on the balance sheet. Why is that? I wasn't too freaked out about it because $386.2 million of that came from goodwill impairment. So goodwill impairment is when a company pays more for an asset than the book value of that asset. So the hope is that, yes, you're paying more today, but that asset can make you even more than you paid tomorrow. And that's the whole point of assets anyway. But the main point is that this isn't likely to be a reoccurring charge. We shouldn't see something like that in their Q4 earnings report. If you're wondering, the asset they paid for was some newer 3D printing technology. Like I said, I'm no expert, but it was for PolyJet and FDM technologies, which were announced not too long ago. I did see those in the headlines. I haven't really been following Stratasys 3D printing as closely as I should have been. I've been focused on other things. Obviously, Neo's made me a lot of money. Bitcoin's made me a lot of money. CrowdStrike has also 2x. So I've been watching like a lot of different companies, and since I wasn't really an expert in Stratasys, I always viewed it as a long-term hold, but I'm going to start paying more attention to this one. But basically, if you look at the financials, Stratasys is still not a profitable company. Cathie Wood says that aerospace has really been held up by the pandemic. So this 2020 was a setback for Stratasys, and they didn't reach all-time highs until 2021. As the pandemic clears and as things get better, we do expect the aerospace industry to also bounce back as well. And hearing what I heard from ARK Invest, in my opinion, Stratasys could be a big player in that industry because they've been doing this for a while. Companies aren't just going to trust any random 3D printing company to make parts for an airplane. We've all heard of airplane crashes before, and no one wants to be associated with that type of thing, and human life is just too precious. So of course, this is going to be a long-term hold for me. I know a lot of you guys have been telling me about some other 3D printing companies. Comment those down below. I want to know what you think about Stratasys. Also leave a comment about that. Make sure you hit the like button. Make sure you hit the subscribe button. I'll link the free Discord in the description below. And as always, thanks for watching. I'll catch you guys in the next video.